SBC Media.
Welcome to the iGaming Daily podcast, analysing the news from the betting and gaming industry all over the globe, supported by Optimove, the #1 CRM marketing solution for the iGaming market.
Welcome to another episode of iGaming Daily, where we take you on the road to Lisbon, uncovering the insights, innovations and strategies shaping the future of gaming and betting. I'm Ted Clay, payment expert editor, and today we're diving deep into the world of payments with our special Path to Lisbon series. As we gear up for the SBC Summit in Lisbon, we'll look back at one of the most talked about panels from the SBC Summit North America, the Payment Leaders panel, where industry heavyweights predicted the tech revolutions that would transform the payment landscape over the next 5 years. With the proliferation of digital payment options offering increased anonymity, convenience and choice, gaming and betting has thrived. But are we truly ready for the next wave of transformation? From decentralized currencies like Bitcoin to advanced AI and hyper-automation, the future holds limitless potential, but leaders must navigate the regulatory challenges ahead. In New Jersey earlier this year, speakers from the likes of Caesars Digital, Nuvei and PXP Financial offered incredible insights on what to expect. And as we prepare for Lisbon, many of those predictions remain more relevant than ever. This year at the SBC Summit, the Payment Expert Summit in Conference Room 4 will focus on the challenges of thriving in mature, regulated markets. Industry experts from leading companies like Leo Vegas, Pinnacle, Trustly, and more will debate critical decisions from direct integration to strategic partnerships. So sit back and let's revisit the predictions of the past while preparing for what's to come at the SBC Summit in Lisbon. This is your Path to Lisbon, only on iGaming Daily.
All right. Good morning, everyone. Thank you for joining us bright and early here for day 2 of the SBC Summit North America. We're here to talk about payments this morning. We appreciate you taking time out of your busy mornings to join us for this session and for the track. As we get started, I do want to make sure we say thank you to our sponsor, PXP Financial. Cameron, their CEO, is on this session. And certainly we have a star-studded lineup here for the lead-off of our conference events today on the Payments Leaders panel. So what we're here to talk about really is what's going to happen around payments over the next few years. My name is Jonathan Michaels. I'm the principal of Michaels Strategies. We're a boutique consulting firm that specializes in the gaming industry. I've spent a lot of time with a lot of the people on this panel through my time at the American Gaming Association and at Sightline Payments. So really excited to talk about where we've come from on the payment side in this space and really where we're going, because there's a lot of innovation coming to the marketplace, but also there's a lot of challenges that are presented just at the growth of the industry. So I'll let each of the speakers introduce themselves. But again, please be sure to ask questions throughout. We're here to have a great panel today. So to get started, I always like to ask a question that's not necessarily related to this business. What is your favorite payments innovation in the past 5 years? Cameron, do you want to lead us off? Yeah, please.
Yeah. So Cameron from PXP Financial, happy to be here. I think if I just have to pick one, the mobile wallets, the Apple Pay is the one that I can go with. And that has changed the way that I'm paying and the consumers are paying. So I think that's one of the favorite ones that I can mention.
Hey, everybody. Jonathan, thanks for having me. Matt Brzezinski with Trustly. I've been with Trustly for about 4 years now, and I head the gaming team here at Trustly. In the past 5 years, I think the biggest innovation, specifically in the banking space that we love, is RTP and FedNow and what it's provided for a withdrawal mechanism for our operators, their consumers, right? Imagine having to wait 5 days and then condense that down just to 30 seconds until they get their withdrawal. It provides tremendous value for all of their consumers to be able to get that money directly into their account instead of having to wait those 5 business days over the weekend, where now they can pay their bar tab with it or pay their mortgage or whatever with their winnings if they win.
Thanks, Matt. Trent Strickland with Caesars. I oversee our payments and fraud teams there. And I should have sat where Matt is sitting so that I could have given that response a few seconds earlier. But, from an operator's perspective, I'd have to agree with Matt. One of the longest outstanding requests that we had from customers was, you let me pay instantly, you take my money right away, and you let me wager with it right away, but then you hold on to my withdrawal for, several days. So with the advent of not only RTP and Fed now on the online banking side, but with OCT and push to debit, we've finally been able to kind of close that loop and provide customers with the same withdrawal speeds that they see on the pay-ins and the wagering side, which I think from an operator perspective helps build that trust. We're not holding on to your money. We're getting you your winnings when you want them in quick and efficient manners using methods that you use to deposit. So I think that would be those would be my top two.
Can I echo that to say that's exactly what I was going to say, but let's try and vary that. So, hi everybody, Warren Tristram. I'm head of gaming, lottery and esports at Nuvei. Been there for the last just over 2 years. Been involved in payments for 11, 12 years and in the gaming industry for the last 21 years. So, but still younger than George. Anyway, you can come back on that, George. Innovation. Matt said RTP. I think that's certainly something that I would have said if I was further up the row. But I think it's all about echoing what Trent said, instant access to your funds. I think that actually, if you can actually deposit and withdraw quickly, people don't want to go and have the friction and the challenge of payments. It needs to happen in the background. It needs to not be something that the consumer thinks about. It needs to allow them to have the faith that they can actually go and deposit quickly, but also withdraw quickly. So just to go and emphasize the instantaneous withdrawals with regards to MasterCard Send, Visa Direct, those complicated with RTP, I think, help build consumer loyalty, confidence. And so I think those three products together have really underpinned innovation within gaming, certainly in the last 5 years.
George Connors with Every. It's ironic sitting on this panel now because when I left my former position, I was all in gaming, all in iGaming, all in sports betting, and then I came over to Every, and next thing you know, I'm in sport. And we'll talk a little bit about that, and sport being more in the digital side. So to the major leagues, the college leagues. But if I had to talk about a product that I've really embraced and then watched grow, and anybody that has been in the gaming space, I've been gone 30 years now, the product would be check cashing. So check cashing was dying 30 years ago, and then 20 years ago, and then 10 years ago, and it still hasn't died. So I think that what I've enjoyed watching is not only the adoption of the products into the industry. I've enjoyed watching now that the car brands and the issuers are finally doing what they needed to do all along. So acceptance is way up. But I think that the ACH warranty side, or the ACH side of the check, which was a dinosaur that was going to die, I love the fact that it's still alive and flourishing. And I think I'll be dead and they'll still be talking about it going away. I'm going to go away before check cashing will, for sure.
And for some of the younger generation in the audience, a check is a paper form that you can write on it.
George probably still uses that at the grocery store, though. But the interesting point that was made here, though, around consumers wanting instant access to their payments, there were studies done by the American Gaming Association and Pay Near Me that said that fast withdrawals is the number one reason that a consumer chooses a sports book. So it's, payments is really the front porch of sports betting. So you enroll in an account and then immediately you go into the payments flow. And Trent's managed this for years in his variety of roles of what's in there, how do you do it? But at the end of the day, customers want their money to get in quickly and they want their money to get out quickly. But certainly this landscape has evolved over the past 6 years since the PASPA decision in May of 2018. So, what are some of the things that have caused that to change? So high acceptance, some of the trends that we see there. So Matt, can you touch a little bit on what you've seen change over the past few years within this space to allow for the environment that we're in today around payments?
Yeah, I think one of the biggest things is the necessity for innovation in the space, right? There's a lot of, companies out there trying to enter the space, and, it breeds a necessity for innovation. So, with Trustly, we've done the FedNow integration as well. So now we have even more banks for RTB available. But outside that, there's other products that, we have coming to market, like Trustly ID. We've heard a lot from our customers that there's a lot of time between when the consumer logs in and creates an account, and then they go through KYC, the long, strenuous process, and all of a sudden they don't make a deposit. So, how do you create that funnel to make it a lot tighter and a lot easier for that to happen so they can start wagering right away? So I think, that competition is really driving, companies to create these types of products. They really make it easier for them to get, more deposits and start wagering. And that product, I think, is coming up really soon here. And I think you'll see more and more of those types of innovations coming out here shortly.
Yeah, I would echo what Matt said. It's interesting. We were having a conversation yesterday. The percentage of customers that go through the process to provide the operator with their name, their date of birth, their address, their social security number, highly sensitive information to create an account that, is required from a regulatory and a fraud perspective to then go on and not fund the account. And there's a variety of reasons why they may or may not fund the account at that time. It could be the payment options. It could be that they wanted to see what offers were available. It could be that they wanted to review some of the markets. But I think if we're able to capture some of that drop off, it not only helps the businesses from a commercial and a revenue standpoint, but it's a better customer. It presents a potential better customer experience where it's seamless. They're not having to go through all these hurdles. KYC and payments are the two biggest hurdles that we face in the industry today. And that's where you see the biggest drop off. So I think, as Matt was alluding to, some of the innovation that we're starting to see is how do we combine those into a single step? How do you, I don't want to reveal the big reveal, but, how do you take your online banking credentials, and just sign in with that? That creates a user account and KYCs you and does that all in kind of, 2 or 3 seconds instead of multiple pages and multiple entries. And maybe you don't get KYC and then you have to go through a manual process. So, I think easing the customer journey, is absolutely something that's on, the next couple of years innovation wise.
So one other area that I know it has changed a lot is the way the banks view this space. So George, could you touch on how you've seen banks evolve and how they've accepted this category when it just went from essentially New Jersey trying this online gaming experiment from 2013 to 2018 to, this industry is more than $10 billion in revenue on the digital side and continues to grow. So talk a little about the banking sector and what's changed there among their view of this category.
So 13, 14, when iGaming, hit this shore legally, I was in a great spot. Now, we won't call it check cashing because apparently Trent doesn't know what checks are, but we'll call it ACH warranty. At that point, that was such a hot product because the banks, nobody wanted to touch anything to do with the transaction. They didn't want to approve. They didn't want to process. They didn't want the brand or their bank brand associated with it. So, what I've seen over the last, 10, 11, 12 years is the banks finally understanding that. I think yesterday I was listening on a panel and they were talking about fraud and they were talking about, exposure, in gaming compared to, me taking Warren's credit card and going to Nordstrom's. I could run that card up, but you bring that card online, I am going to be checked. I'm not getting through easily. If I'm in a brick and mortar, I'm not getting through easily. So I think what I've seen is the banks finally understanding this is a overly regulated market. I mean, very safe market. People are going to game whether they want to participate or not. And I think what we've seen is the evolution of the bank and the banks and the brands understanding that they need to be part of it or they're going to be left behind.
So, when this whole thing started a few years ago, most of the top 10 banks in the United States wouldn't accept gaming transactions. Their merchant category code or MCC 7801. Now, what's kind of interesting is Capital One is the only one that still doesn't accept that. And I could see Capital One's headquarters from my house. So it taunts me every day.
One other thing that's even more ironic than that is when a company, so I worked for FIS, right? They acquisition and bought a company I was at. And so FIS owned a debit network. They had a gaming company they were making a bunch of revenue in, but their debit network wouldn't touch gaming, which was more than ironic. Now they're all on board. So
Yeah, I was gonna say the same thing. In the early days, we banked with Wells Fargo, and we'd get on these quarterly business reviews or monthly calls with them, and we talked about card acceptance, because card acceptance was 20, 30%, 40% maybe most, and we talked to them about, hey, we have all our funds with you, we do all of our merchant banking with you, but your customers can't use their cards on our site, and it's been interesting to see how that's just completely flipped now.
So, and certainly we've seen that evolution over the past few years, and a lot of those issues that we talked about around card acceptance kept probably every single person on this panel up at night. And innovation a lot of times comes out of those challenges. So what keeps you up at night now, Trent?
Well, I've got an 8-month-old that's teething right now, so he keeps me up mostly at night. But from a payments perspective, I think it's the fraud side of things, and in the early days, it was acquire customers, get as many people as you can through the door, worry about the fraud later. And now I think it's really how do we make sure that our site is secure, our customers are secure, and that we're preventing, trying to identify and prevent that fraud earlier on. We just saw Pennsylvania this week that they're going to make a rule change to disallow credit. So I think it'll be interesting to watch and see from that perspective, from a consumer protection and fraud perspective, if that continues to progress across other states.
Just to jump on the back of that, I know that one of the biggest challenges is fraud. I think it's like 308 billion was down to fraud which happened, which was a false positive fraud, which shouldn't have happened. So I think that's one of the biggest challenges I think that the industry online experiences. 4 of the key levers, which I've said on previous shows or exhibitions, is down to conversion, acceptance, fraud, and cost. That's what the merchant can go and control. One of the big challenges at the moment, as you say, is fraud, and that's down to fraud circuits, rings, and so it's being able to get a handle and control on that, because you want to try and stop that, but you want to try and stop the false positives. And so I think that there's lots of the fraud control systems are preventing that. And as I say, 308 billion was a number which was reported last year, which was down to false positives. So how do you try and get that through with keeping the fraudsters at bay? I think that's the key challenge, which would keep any operator up at night. And certainly from a payments perspective at Nuvei, how can we try and assist the operators, given the intelligence to try and work around that? Well, they'll be working with other third-party solutions as well.
So certainly one of the other interesting things, so you always have this relationship, and you both alluded to it, of we want to get people in, we want to get money in the ecosystem, but we want to make sure we protect the consumer. And certainly one of the things that's challenging in this category around payments, and I'd love to hear the suppliers on the panel and their perspective, is the high cost of it. So certainly gaming has been historically a high-risk merchant category. As a result of that, costs are higher than a lot of other e-commerce businesses. And you also have this whole churn element that you really don't have in other things. So when you put money on your Target Red Card, you're going to spend that money at Target. When you put your money into the Caesar Sportsbook account, you're going to play, you're going to win, you're going to withdraw, you're going to redeposit, you're going to withdraw, you're going to redeposit, you're going to lose, you're going to deposit again. And the money just keeps cycling through. So talk a little about how some of the solutions that are out there could ultimately help lower the overall cost of payments. Matt, do you want to start?
Yeah, absolutely. So, ACH inherently is a way more cost-effective option than, the credit network and other types of payment methods. But, I think it's also important when you take a look at the ACH, you're at risk as an operator for absorbing a lot of losses, right? There's so many things that a consumer can do to play shell games after a transaction's been approved, or just simply say that, that bet that they lost was not them and it was a fraud attack, right? So I think it's important when you're looking at how to keep your costs low. Something that is extremely important is fraud prevention, and maybe having an option where, it's a full warranty solution where you're being protected fully by your payment method, that, hey, if there's ever a loss, that can come back, you're protected. And I think that the full warranty type solution helps drive down cost from your net returns as well, because, you never want to be on the hook and dealing with that consumer and, having that, poor consumer experience where, they're out of funds and they're mad about it and you're complaining to you. And, with Trustly, we offer a full guarantee as well. So, we really do a great job of protecting, our merchants of, those types of losses. But at the same time, we do it at a lower cost because we operate on the ACH network.
So I think how, your question was, how can you actually try and improve working with the customers or the operators to build that loyalty as well? Were you leaning towards that?
Loyalty, cost, ways to make Trent's life easier.
Okay, so I think the research that we've seen from Essentia, I think digital platforms, card issuing, I think there was about 500 million cards were issued last year. We expect that to be 1.3 billion according to the research in 2027. So I think being able to actually, I can see operators moving into card issuing a lot more, something that Nuvei has the capability of doing, I hasten to add. And with that, they will be able to go and build that loyalty, that brand resonance with them as well. So, and that helps to understand who your customer is, so you can mitigate against those fraud challenges that Matt was referencing. So I think card issuing is going to be something on the landscape which is going to be happening more and more. And I think that will go and help mitigate that challenge.
Just to add a little bit, from our perspective, I think data is important, and the whole process of getting the transaction through and having a high success rate is where you can optimize your market money that you spend in order to get the customer in, and having the right data inside and providing the operators with the right information and right reporting will help them to optimize the success rate. So that's where we spend some of our energy, right? And I see that's getting more and more important, understanding the customers and adapting to that. And obviously we talked about, instant payouts and having that fast payout process. What the friction is the fraud and identifying the right fraudsters and not paying that out so that the whole process gets faster and get through. I think that's where the fraud tools and the new technologies will be able to help and identify the right ones.
Yeah, I think going back to, you asked about cost, right? So the tiger has been let out of the cage, and this is what I mean by that. In the brick and mortar world, the Caesars of the world, they're not absorbing cost. And so right now, what's happened inside the e-com world or the online world, because it started with such desperation to get anything in payment across the line, the sites picked up the cost. And so now everybody's been trained that the sites pick up the cost. The consumer, the client will never pay that cost. And because of that, what's happened is it's all cost to them. And then what they have to do is just beat the hound out of the ones providing the product to drive that cost down. So, until there is a solution to the absorption, whether it's warranty or it's, a card debit, and it's not all on the back of the site, which then filters back down to the providers, that's going to be a cost that's going to be hard to overcome. In the brick and mortar world, that cost is absorbed by the user. So if you want $500, I remember when $500 would cost you 10%. I remember when every check cashed, a check is a paper thing, when every check cashed was 6%. But now what's happened is everything that happens, whether it's on the rail or it's ACH or anything else, it falls back in the lap of the book.
Can I just jump on that? You're talking about the fact that the operators are going to pick up the cost, but that's no different with any other industry. So especially from a consumer perspective online, that cost is
online.
Online. So that payment cost is always picked up, irrespective of whether it's gaming or not. So I think that's just the norm. And I think that's what's really is important from a consumer perspective is to have that parity, that consistency, where we start talking about when they go to a cashier page to go and check out, they want to be able to see Apple Pay, as Cameron referenced earlier. They want to go and have a look at, whether they go to Macy's or John Lewis or wherever they might be spending their money. They want to have that consistency in online. And so the cost is always picked up from an online perspective by the operator. But what I can see now is that certainly from a card acquiring perspective, the margins are very, very competitive. In order to try and win business, we're talking about fractional costs there. And so you have to try and think about, the pricing becomes a real commodity. You want to try and look at how you can differentiate yourself so that you can actually work with the operators and give them some value adds that they'll need going forward, whether that's, fraud systems that they might wish to have, other products that you can leverage with regards to from a cost perspective. I know that there are payment providers who arguably give their acquiring away for free, which makes it very challenging to go and compete within that environment.
Yeah, and just to clarify, agreed, except for the fact that the point was, had this industry been more accepting, if the banks and the card brands had been more accepting of what was going to be the reality online, and the model that could have been followed would have been the brick and mortar model in sport, not anything else. It would have been an easier pill to swallow, and I think there would have been more margin to be made, not only on the provider of the services being us, but it would have been an easier thing for the book. So you're not going to put it back in the box now. The point is, because of the problems that we had, having this market accepted in the U.S., it changed the way that things were already, poised in the brick and mortar world. It would have been nice to bring that model over.
So, and one of the things there that you bring up is the difference in who pays for it, the land-based versus digital. And certainly one of the things that came about a couple of years ago that I've been surprised at how slowly it's permeated within this industry is cashless payments. So, George, touch on that from your perspective, where you see that going over the next couple of years. And ultimately, certainly from an operator perspective, could there ultimately be an omni-channel wallet that somebody could use across their digital channels and land-based play?
Yeah, I'm kind of in a weird spot right now because the sport technology, like the app technology that we're providing at Every for sport teams, that right now has nothing really to do with sports betting other than its reality. You don't think about a pandemic being great for the industry, but in a way, it was a great thing for cashless because people were scared to death. Now, I remember, and I know that you all have heard this, that it'll never be the same. Well, I didn't believe that. We have short-term memory, and so now we're back to where we're really not afraid to touch money and touch things, and, it doesn't have to be cashless. So I see that as a real budgetary problem in the sports side. But the snowball has started to roll now in the gaming side. And I think that it's going to be up to us to keep pushing product out, to keep that going, because a cashless, transaction, whether it's brick and mortar, online, or other, is where not only it is now, and it was accelerated by COVID for sure, but I think now our responsibility is to not show that was a product built out of desperation. It's a product that's built for the future.
Yeah, I'll jump in there and think from a cashless perspective on the operator side. We were just having this conversation yesterday about when we look at retail sports books, customers are constrained by how much cash they bring to the book, their ATM limits, and one of the things we're trying to balance right now is there an appetite for point of sale, chip and pin, debit transactions to place your sports bet rather than paying with cash. And then it gets back to the cost perspective. Are you converting cash customers to a more expensive cost method, or are you actually providing additional lift on top of the cash that they would have spent, because now they don't have to go to the ATM to spend $10 or $5. They can just use their card at the retail location to place the bet. Maybe they originally would have only spent the $100. Now they spend $200. So it's something that we're taking a look at now. And from the Caesars perspective, I think absolutely our goal is to move towards an omni-channel wallet approach. We're the largest brick and mortar casino in the U.S. There's multi-million number of customers that have the Caesars rewards card. So we really see that as one of the value adds for Caesars, both on the digital and the brick and mortar side. And how do we mesh the two of those? How do we take your Caesars Sportsbook app or your Caesars Casino app, tie it to Caesars Rewards, and make that balance usable, not just for sports wagering, but also maybe you had a big win and you want to, take the family to Nobu or go see Adele or pay for your room. How do we really blend that all together so you truly have a Caesars wallet that can be used online and in retail?
Oh, excuse me. Hey, here's my card. When we're done, I know how to do that for you.
I was about to jump in and say that Nuvei has an omni-channel solution. So,
he's already got my card.
I was going to say, you don't have to look too far.
First pitch competition is this afternoon, so we can come back for that.
I did hear Warren say earlier that some providers give their services away for free, so I'm just waiting for that one to come up.
I said, fractional margins, but for exclusive business. But with regards to omnichannel, I think it is important the fact that player centricity is so important, and Trent was referencing it as well. being able to understand, have information, knowledge, insight about your player, irrespective of channel, and being able to go and have a payments partner who can actually bring all of those threads together in easy dashboards to understand that, I think is crucial to be successful going forward. That allows you to understand who your customer is, their playing behaviors, patterns, deposit withdrawals and such like, and that's valuable. That's like gold. And so as a result, then you can build a better relationship with the customers that you want to build a relationship with and grow your business.
And I think to Warren's point, one of the things I've been thinking about is we've always done a good job of segmenting customers based off of their spend or their loyalty, or from a marketing perspective, and custom tailoring options for, bonuses or welcome offers to the customer based off of their value to the business. But I think there's some room from a payment side to kind of bring that into perspective as well. And how do we measure, how do we understand that Warren is, this type of player in this demographic with, this income level, and cater the payment options or the payment mix to him. Matt was talking about the warranted versus the unwarranted solution. I think there's benefits in both. And you've really got to use that data to drive that decision making that, Trent's a dodgy guy. We want to send him down the guaranteed route. So we're not taking on the risk. Matt is. But we know Cameron is, a good customer. He's been a long time customer for, with us. He's never had any returns. We've never had any problems with him. Well, let's pay a little bit less and send him down the non-warranted route, which helps optimize the customer experience, as well as, as controlling costs from an operator perspective.
Sorry, to jump on the back of that, being able to have that ability to orchestrate between warranted and non-warranted, I think is crucial.
Yep.
And so having a warranty solution, as Matt said, is really important. That takes a lot of stress and pain away from the actual operator. Being able to have a non-warranted solution where you can go and reduce your costs significantly if you've got that insight that we were talking about earlier is really good. But being able to couple the two, you don't want one or the other. It's having a hybrid solution, which Nuvei has as well, is really where you want to go going forward.
Well, as I expected, this flew by. I want to thank all of our panelists. Thank you, everyone.
Thank you for listening to iGaming Daily, sponsored by Optimove. We're looking forward to seeing you in Lisbon.
Thank you for listening to today's iGaming Daily podcast, supported by Optimove, the #1 CRM marketing solution for the iGaming market. If you want to find out more about some of the subjects raised today, feel free to explore any of the sites in the SBC News Network or check out the latest edition of the SBC Leaders magazine. Happy reading.